Welcome to Markets Now. I'm Rochelle Rook with Scott Varlick of Coima Varlick. Lots of green on the board this morning in grain and livestock futures, with the exception of a few of those nearby hog contracts. Well, let's talk about this cattle market. More record cash trade this week, right, Scott?
Absolutely, and thanks for having me. It's Friday. We do have all the green on the screen, and that does feel good after what we've been drugged through on a lot of these markets. And cattle, in particular, have had such a fun run here. I mean, it's all-time highs and cash up, in leaps and bounds over 3 weeks straight, and that cash market led the charge again this week. There was a lot of packers that still need cattle. We're in we know we have tight supply. We've talked about that for years, but here we are. They are close to the knife. You get one of those majors that can be, in trouble and needing cattle, then it can really have some big effects on the market. I mean, that's what leverage means to the market. If we, not too long ago, we were talking about formula cattle and the effects that has, and we need more cash cattle. Well, when you get more cash cattle, this is what's possible. I mean, we saw 223 bids by several different packers in the north, and everybody was able to get some of these cattle moved. And we came into the week with maybe some very manageable show lists, and they mowed through those pretty quick. And are still out looking for cattle. I mean, those 223 bids are still there. They'll still take more. It feels like one of those weeks, after we've had these 3 weeks in a row, like this is where they're trying to get anything they can, trying to scoop them and get them around them, because they've lost the leverage. It's gotten out of the hand for the packer. They can't keep it contained. And so one of those weeks where they're trying to, make hay, they're trying to get as many numbers around them as possible. And boy, it'd sure be hard to pass 223. If I had my head stuck in the ground at 225, I'm okay taking that $2 less, just because it's such a great price, and 218 in the south as well. So that also followed through down there.
So let's talk about the futures reaction. We have been higher, but we haven't taken out the contract highs. Even though you have this sharply higher cash, does the market feel tired?
That's a great question. And everybody's asking, does it feel tired? Does it feel toppy? And everybody's trying to pick that top. I think as producers, we know how much money we're handling, how we know we're respecting how high this market actually is. And we all want to protect our bottom line and know that we can get near the highs and get protected right here. So every time we dip just a little bit, we all get pretty nervous. We get those questions. Is it tired? Is it toppy? And this doesn't act like a market that's tired at all to me. I feel like with this cash up every single week, maintaining this leverage, that's been very important. But from the futures side, I think it just got to the spot to where we're not bearish, but it's almost just like it feels like it's too high to buy. It's just, wow, we're really at these wild prices. And do I want to stick my neck out there and buy June cattle at 210? And it feels hard to do. So we've chopped a little bit sideways here, but I still think there's a pretty big crowd waiting for those little breaks to buy, because every time we do break this market, cash market bails us out. And that still looks to be the leading factor in what I'm going to lean on. So long answer, I don't feel like it acts that tired. It's just taking a little bit of a breather here until we can find some, get some more time. I mean, if this cash stays on next week and we start getting into May, then June's going to start to look, quite discount. It already is quite discount, but
right.
Every week we crawl into May, that's going to matter more if we can hold strong on these prices.
Yeah, and if you can keep the stock market recovering, I think that will also help keep everybody in here. But like you've said before, cash is really king here. So talk a little bit about demand. Boxes made 2-year highs here this week, and we're just off that level in the choice. How good is demand right now?
Well, demand for two things. I should throw in before I shift gears into the demand of the meat, the demand of the feeders has been amazing. I kind of forgot to throw that in that last twist, but that, as far as the cash market bailing us out, that's what we can lean on and stand. I mean, when we're seeing closeouts like these, $500 a head, wherever it's going to be, it could be less, could be more, all around. I mean, don't expect those feeders to break that much. I mean, we're in a time frame to where, hey, northern cattle are kind of dried up, so that index should start to break on southern influence. And what does that index do? Stays strong and moves higher. So I just think that's your demand of the feeders. staying that strong and keeping us up here, and demand in the meats, very impressed. We're making these cattle so huge, uh, record weights. We're challenging how big we can make them. And when you're getting 223 on the other end, you can handle some lost efficiency on those last days, and what that's paying you to do it is tremendous. So we're making up these tighter numbers by making them bigger, killing less numbers and keeping that production at the same level. And what it's telling me is that demand is outstanding, that we can be with last year's production levels real close and still have these boxes moving, still have cash prices at 223. So I feel really good about the demand. It's something that's not bothering me. I think we're seeing the next generation saying, yes, we want beef, we want high quality beef, and that's coming through. So no matter how much pounds we've thrown at the market this far, as hanging on the hooks, we've been chewing right through it.
Right. Follow up on the feeder cattle. The cash index is at a record level. Do you think it tops 300 here soon?
The index is going to be a little tougher. I mean, we're going to have to see these fall feeders lead the charge up there, I would think. We're going to probably be more looking at some of these video sales that start in the spring, and what are these fall contracts going to do. I have more interest in that than I do what that index is going to do right here in the spring. That would be my personal opinion, as we see a lot of that southern influence stuff. But what are guys going to start sticking their neck out there for the fall feeders? How much long-term bullishness is there pumped into this market? So I think that's going to be a little bit of a leading factor there. Okay. Excited to hear about it, but I know that producers are pretty nervous. What do I do? I've got the rancher A and B out in Montana or North Dakota offering me cattle at these prices. What do I do? And they're high, and we're going to have a lot of risk going into next year with the money that we're having. Right now, we're all pretty nervous. So trying to be friendly, but knowing that we've got an immense amount of risk with the dollars that we're handling right here.
For sure. Okay, the hog market, as I mentioned, we're seeing a little bear spreading this morning, so a little pressure on the front end of the board. Even though we have discussions maybe starting, or the talk starting between the U.S. and China, which should be positive. Is it just because we have the nearby futures at a pretty good premium to where the index is? Is that what's holding us back?
I think that's a great point to make. As the index, stays in the low 90s, and we've got summer months that feel like they want to go try on the 100 level, the triple digit level, and haven't been able to do so. We've heard about some pretty decent cash, but still kind of holding that index down there. And maybe the summer months are just waiting to do it. I looked at my calendar this morning in May too, and you think, okay, we are closer to summer than I thought, I guess. So guess I better get the golf clubs dusted off. Maybe everybody else has already, but time got away from me there. But I think that you do have China tied into this, just the uncertainty. Are we actually getting talks from China? We're apparently trying to talk to them, but are they talking to us? There's that, they deny that they are, maybe they are, maybe there's some deals that are happening, but that just keeps that uncertainty looming in the hogs, where we need some good export news. But we do got to remember, Mexico, our number one customer, and that seems to be going well, better than it is with China, I guess, for sure. I shouldn't say well, but so at least we can say, hey, we've got some deals already, working in the works. Hopefully that stays that way. But so China news a little bit, and cash the other. I guess you could throw those two things at it, and you're right there.
Yeah, you're right. I think the lean hog index has been up now like 11 straight days. So that certainly should be supportive at some point. Okay, the grain market, obviously to the plus side, is optimistic about trade deals, but specifically it looks like China.
Yeah, I think specifically that's it, and I guess we have to trade these rumors. That's how it's been for months. It feels like what we're hearing, and just to only say then the rumor swings the other way. So I guess current rumor right now, yep, we're maybe getting some headway with China, which would be great. I think it's a couple of months into the tariff wars. I thought maybe it could get drawn out a little bit longer, but hopefully seeing some headway. We know we're in this 90-day window in some of the other markets, so hopefully we can get something done there, because we know what the markets want to do when we get some good news there is they want to move a little bit higher. And we've got a dollar that's weaker. That's also helping, but you've got a market in the wheat that's probably also helping here today. It's been on the dive lower, and I think it's gotten to a price where many people were saying, hey, it's got some value here. We're at a price that looks too low. So if we can finally turn that market around a little bit, maybe the rest of them can just breathe. So getting a small breath, not a big one, but we'll take what we can get at this point.
Yeah, wheat has definitely been an anchor on the market. New contract lows yesterday, even in KC, so that would help. We do have soybeans above both the 100 and the 200-day moving average, though, so that technically looks really good, doesn't it?
Technically been moving back and forth here a little bit this week. I mean, we got below the moving averages and it looked like, okay, we might be in for a serious break, only to crawl back up and get back above them. And that was pretty impressive for corn and soybeans, the way that they've fought some of the bearish technical signals earlier. So now you can kind of flip those to feeling a little bit better, and at least we can kind of put that to rest for a minute. I mean, it's not like these soybeans and corn have had these dollars of swings. They've been pretty minor, pretty slow. It's not been too much knee-jerk reaction. So we're kind of holding some areas and maybe starting to look ahead. I mean, starting to say, what's this weather forecast going to look like? We know we can get stuff planted very, very fast. And so I think that worry has kind of slipped away. And now we can look ahead on some forecasts. And yeah, a lot of the long-range forecasts really want to pump in some dry weather. We'll see. So I don't think that you can just put them to bed and head lower just yet, because we don't know that this crop's made and in the bin yet. There's going to be a lot of uncertainty coming into this year. So definitely some room for some bounces to happen in these grain markets just yet.
You bet. And staying above those key moving average seems like a victory. All right. Thanks so much, Scott Varilek with Kooima Varlik. That is Markets Now.